How's it going, everyone? It is October 18th, 2019, and this is Thriving Bulls Trade of the Day. Hello and good morning or afternoon, everyone. This is Thriving Bulls Trade of the Day. We are looking at /YM, or the Dow Jones Futures here. We are definitely seeing some consolidation here once we've had this huge bearish play. So we're looking to buy into this trade. We just kind of want to get some more confirmation here. We definitely see some nice divergence, as you can see here, and we're just kind of stagnant. So we can see some divergence there, which is definitely giving us the idea that price is about to move up. Let's go ahead and go into NADEX and see where we're at. What we want to do is kind of break this high here, which is where price is here. Let's go ahead and buy into this one. It's cheap. I like it, so we're going to go ahead and buy into that one. Let me refresh the page because NADEX is being weird. Alright, sorry about that. Sometimes NADEX, again, on this beta gets a little funky. So we're going to go ahead and go into the 26817. I believe that was the price. Actually, it was this price, 26805. Okay, so what we have here now, what's forming here on the 1 minute chart is, I'm sure you can see it on the 1 minute chart, we have a nice M formation, which we could definitely see come back, retest these, and then skyrocket up. So what we can do there is go ahead and take our Fibonacci retracement tool, take from this swing low down to the swing high, or up to the swing high rather, kind of zoom it in here, and then what we kind of want to see is for price to kind of test that 50 zone. It is testing the 23.6. Where are we at in a minute? Okay, the new candle is about to form. Alright, it did open up way up here, so we might start seeing some upward momentum. Alright, great. That's what we want to see. Okay, we're going to go ahead and buy in for 50 there. Not exactly where we wanted to be. We wanted this thing to be in the 30s, which is where we were at. But that's totally okay. So what we want to do now is, now that we have this position open, what we want to do is to have our take profits ready. So obviously, as we know, our take profits, we want to just take off half of our full potential. So our full potential here is 43 on each contract. That is our full potential, is $43 per contract that we have up. But what we want to do is take off half of that. So we do 43 divided by 2 plus 43, because it's a buy, so 64.50. So if we go into 64.50, that's where we want to go. As you can see, market is just starting to really drop here. Let's see exactly where we're at. Okay, so it's about to test that 50. We honestly might be able to buy in some more contracts too and get a lower price, which might be good. Might not be a bad idea. We're going to go ahead and do that. Alright, so now what we have is a much lower price. Instead of 44, now we have 40. So now what we can do is go into here, and so we can actually just say that we're going to limit order at 60. Once we get to 60, we can close all these out for profit. Okay. Alright, perfect. So what I'm going to do now is basically kind of walk you through the trade, tell you why we took it, why we're going to hold on to it until we get into a good position here. What I want to do next here is actually get ready for some technical analysis play on our take profit zone as well. So we want to take the recent swing high down to the recent swing low. And as you can see, the 23.6 is roughly right on -1, which is, again, like I always say, no coincidence there. So what we want to do is probably, on a technical analysis play on take profit, we want to probably take profit around here, just to account for the spread and all of that good stuff, just in the event that price were to just swing up and then swing right back down. So we want to do at or above. Create the alert. So once price hits here, if we're not filled on our 60 position, then we'll just get out wherever price is at. If it's at 57 or if it's at 50, we'll just get out there, because it is Friday and it is already almost 1 o'clock p.m. Eastern Standard Time. Now, while we have let this trade develop, let's just talk about that for a second. If you are new to trading and anything like that, so A lot of people will tell you not to trade Mondays and not to trade Fridays, but most of the time they don't actually tell you why you're supposed to be staying away from them. So why you want to stay away from them if you're new, I should specify that. If you're new, is because on Mondays, typically your technical analysis, your indicators, all these things don't really go into play as often as they do Tuesday, Wednesday, Thursday. They typically don't go into play as well on Fridays. And that's only because on Mondays, people are opening up massive positions. These big hedge funds, these big banks, these big institutions, they're putting up their huge positions up for the rest of the week. And you'll see that in the beginning of months as well. You start to see a lot of crazy activity. Maybe it's not like super volatile, but you start to see things that you wouldn't typically see. And you're like, well, my indicators are saying this, but it's not doing what it's supposed to be doing. Why is that? That is why. And Fridays, these are the exact same reason. Your Fridays are going to be, again, a little wonky because you have a lot of people closing their positions. So because you have so many people closing positions, price might not be doing exactly what you want it to do. So let's go ahead and just kind of analyze this trade a little further here and to kind of show you guys why we took it. So let's go ahead and go into a much larger time frame instead of the 5 and 1. Let's go ahead and zoom in here. We'll go ahead and bring out our pin tool. On the 30-minute chart, which is about to be up in 10 minutes, we are starting to see a doji candle here, which is actually really, really good for us. But why we took our trade is you can see that we have a gap here that we have now finally filled. Price definitely wanted to fill that gap. It just took it a few days to do so. Now that it's filled that gap, sometimes we will see price go back up. Sellers are like, okay, we've got what we want. Now we can go back up. But we also have structure here, we have structure there and there and there. We have structure all around the 1.5. That doesn't always mean that price is going to hit around the 1.5, and price may do so because we have our 200 EMA resting right upon there on our 30-minute chart. But we also have all these POCs that are resting right on this. So we might not see price go all the way down into that position, but if we do, it will be what's called a stop hunt, which is where price will start to kind of go up a little bit. Let me just kind of zoom in so I can show you. You'll have price sometimes go up a little bit, go about halfway, and then it'll just spike downwards. It'll go about right here, and then it'll just start to rocket up. And I'm sure you've seen that. If you're a trader, I'm sure you've seen stop hunts happen. And what it is a lot of these institutional banks and stuff like that. And I like to say this not to make people think that there's like a boogeyman out there just wanting to, hit your stops, and they're all looking at retail traders trying to make you broke and all this sort of stuff. It's not like that. These people are using a lot of different technical analysis. They're using a lot of indicators out there, especially the Fibonacci tool they have indicators and they have information that us retail traders don't have. And so what they know is where certain prices should be hitting, where they shouldn't be hitting, and things like that. And sometimes if you have price around that area, sometimes it just doesn't work out and you'll have big spikes like that. And when these big institutions see that price is around here, they just start buying, and then that's when you see a huge spike up. It isn't because there's like a boogeyman out there just thinking that, oh, I see that, John Doe has a bunch of positions here. I'm going to, and he has a bunch of stop losses. I'm going to go ahead and just X him out. That's not how it works. So I want people to understand that. But that is why we took our position. We are still seeing a lot of structure where we have our position at, which is roughly about here, where we actually took it. Our actual contract is a little bit up here, but we did take it because of all of this here as well. So what could possibly happen in the near future is we definitely have a lot of gap to fill right here. This gap was created roughly around the 11th of October. That was when that gap was created, at the 11th of October, and it has yet to be filled. So what we could potentially see is some huge bearish momentum to break this 200 EMA and to start really going down. If we go into the hourly chart, we can see that the EMA is roughly about halfway from that gap. And if we go into the 4-hour chart, we can see that 200 EMA is roughly about the end of that gap. So we can see probably in the next few days, as price is now is overbought here. And I know that this is a little bit of a risky play because all of the indicators are saying that you should be selling. Why are you buying? But we're just looking for a little bit. We're not looking for anything major. We're just looking for a little move. So that's why we bought an out of the money contract as well. So let's actually go ahead and see where our position is right now. We're still in the negative, but that's totally fine. We're not crazy in the negative. We are about to test these highs once more. This is the third time, or the fourth time. So fourth time's a charm. Well, I guess I should say third time. It hit here once, and then it's 1, 2, 3. So we'll see if it breaks through. If it breaks through and starts to come around this area here, we might actually start to see. We'll start to see profit from that area. We are really, really close to break even on this trade, so we're just going to kind of wait for that. But going back, we can definitely see probably in the next few days, if not in the next couple of weeks, we should start seeing price come down and try to fill in all this gap, because that's what you typically see. If I can show you, you have gap here, and it was filled right there. We had gap here, and it was filled. We had gap right here, and it was filled. And we have all this gap right here, and it's not been filled. Gap right here, and it was filled. Gap right here, and it was filled. Gap right here, and it was filled. So every single time you get a gap, it's typically filled. So and these buyers and sellers know that, and that's always something to consider. Is when you have these, and sometimes you have gaps that do this as well. Like you have this gap right here, and it wasn't filled by a major upward momentum move. It was only filled by this little bitty bit of price, and then it started to go down. The sellers said, okay, your gap is filled. We can move on now. So let's go ahead and go back into the lower time frame, see exactly where we're going here. Okay, so now we're breaking new highs, but we will kind of watch this trade. We have our take profit zone roughly about there. We are breaking into the higher Keltner channel, so we want to kind of see price move up a little bit more, and then we'll see if we're about taking profits. I did want to go ahead as well and kind of show you the in-between on the -1 and the -1.5 as well, so we can put that there. So I did the calculations already, but here is where your negative 1.25 is at as well. So we might start to see price come down and test that level. And this is where all of our consolidation was halfway through the 1.0 and 1.5 move. So we might start to see price come down and touch that region and then come back up. And as you see, we are breaking a little bit of new highs on the 1 minute chart. We are not going any lower than our price right here. So we might start to see the price starts to come up in here and try to retest that 23.6, or try to test that 23.6 on the 1.0. So we're just going to kind of wait this out and see exactly where we're at here. We are in profit only by about $3.50, so we're not in profit by much. It just seems like a lot because we have a lot of contracts on, but $4, $3.75, $4, $5, not really a lot when you think about lower contract size. So we're just going to wait this out and see what happens. I did want to come back as well and kind of show you that we are about to come back and retest this 200 EMA, and that might be where we want to take our profits at. So we are going to just kind of wait this out. This may not be a particularly big trade, but we are going to look at probably taking a little bit of profit here. We're going to go ahead and just kind of wait this out and see exactly what's going to happen. So we are going to go ahead and put a little bit of a marker right where 200 EMA is, make it the same color so we know. We'll make it dashed, make it about 2. Then we're going to go into the 1 minute, and we can kind of get an idea. So as you can see, price is just about to get there. Excuse me, and we are seeing some overbought zone here. Let's go back into NADEX, see exactly what we're seeing. We're only seeing about $6 worth of profit, nothing crazy, about 7. So it's just kind of fluttering around as price just tries to figure out exactly what it wants to do. So we're not really seeing a lot of good type of candles either. They're not really how do I say, you can see that they're like opening and closing not where they should be, and you're not seeing a lot. And it's just because the volume is a lot lower now. So we'll just keep going back and forth and seeing what we can do about possibly closing this trade out a little bit early, and just kind of getting an idea as to what we can possibly do for the next potential trade, or we just kind of call it a good week and move on. So we're getting into 48.50s, 48, now 49. All right, so we're now testing this high here. Price doesn't seem to like it. All right, getting a little bit of high spike. Okay, 50, we're about $10 in profit. Just keep going back and forth. Okay, so we've definitely hit our 200 EMA on the 15 minute, I'm sure. Yeah, we definitely have. All right, so we are just about probably there to probably close this trade out. What we'll go ahead and do, and just go ahead and delete this order. And we're just going to go ahead and make this order a limit for 50 in the event that it gets there again. And there we go. Our price was filled. We made about $10 per contract on that particular trade. Nothing crazy, nothing insane. It's just that having this 200 EMA, it may not, price is definitely going to start slowing down. And, you know, we don't want to get caught in a position where price hits here and then starts to flutter around. It goes down, goes up, goes down. I mean, it is Friday. So we did make our profit. We made about $10 per contract on that trade. So if you were trading just a one contract trade, you'd have made $10. So that should be good. So again, we want to just finally just kind of go ahead and kind of show you again why we took the trade and all that good stuff. So we will show you that. So we'll go ahead and show you. All right, perfect. So we have our 1.25. We'll go ahead and delete that. So we were definitely trying to look for price to kind of come around the 1.5 or roughly around this area because we had structure here and here and here and here. And we just weren't seeing it happen. It kind of slowed down once it hit the Monday and Tuesday POC, and it may start actually come down here in a minute and test it now. But we already saw structure here as well around these POCs. You can see that we had a lot of consolidation around this area. And not only that, but we had a huge gap that we wanted to fill, which we did fill. And usually when we fill gaps, we see a little bit of a rejection move off that fill. And we saw rejection here, and we saw a big price movement, that breakout right there. So we definitely saw that there was structure here, and we are oversold. So we do see that on the 15-minute chart. So because of all of those things, we definitely wanted to follow that. Now, the other big thing is that when it comes down to major price, let's go into like a 1 hour or even a 4 hour, you can still see that price is above this 200 EMA, which suggests that price should be still going up. Now, what we can definitely start to see here is, once again, we definitely have all this gap that we need to start to fill, and we haven't filled it yet. And so we could see price kind of come up around this area, retest these areas here, and then throughout the week, and then start to come down, and then maybe, you know, start to test around this 200 EMA as it starts to go like that. So we could definitely see that as the next week starts to develop. But as of right now, we've gotten our trade in, we've got our trade for the day, we're done for the day. But I hope that you guys liked the video. I hope you guys liked the trade. If you guys have any questions, please don't hesitate to comment in the comment section down below, or visit our website, www.thrivingbull.com. There you can sign up for our beta signals once they start to come out. We have a signal table that we have been developing for the past couple of months where you guys can get trades and all that great stuff. And not only that, but we also have an auto trader that we will be developing, that we are developing as of right now. And that will be released very, very, very soon. So if you want to get trades automatically, you don't have to be at your computer. You don't have to read charts. You just let us do all the work for you. That will be available very, very soon. And again, our website is www.thrivingbull.com.